Okay, let's say you're getting a loan for something that you need to buy. You're probably thinking about using your bank. But who is your bank? Is it one of the larger financial institutions that have been around for ages, or is it the company that makes your smartphone? It might sound kind of ridiculous, but it's becoming a really real choice. A lot of tech companies that continue to delve more and more into finances as time goes on, but they're actually gaining a decent bit of market share in a way that non-financial institutions haven't been able to in the past. Albeit this is with a little bit of help, but it's still a big move nonetheless. And it might sound as ridiculous as Netflix delivering DVDs just like they did before streaming. A big part of this is because payments have gone more and more digital, more than they ever have before. And given that you're usually using your smartphone to make these digital payments, you can understand why the companies making the phones would want to get in on it. And while there are a lot of companies getting into this space, the most notable of which are definitely Google, Samsung, and Apple, mainly because these are the big three players in the smartphone market. And while they may not be used as much as something like Venmo or Cash App, it's still really important because these three companies really don't put all their focus on the finance industry. Not yet, anyway. While Google was the first of these companies to do this, Apple is actually the one making the biggest waves. This is in large part due to the amount of iPhone users and also the introduction of Apple Pay Later, which is essentially getting small loans to pay for things that aren't Apple products, which is pretty much one of the main functions of a financial institution. This doesn't even compare to the biggest reason why Apple Pay is so popular, which is the fact that banks actually decided to work with them. Most banks don't want to work with these payment companies because they don't want to pay a fee. However, with Apple Pay, they're really paying a fraction of a cent, so they didn't really seem to mind. Working together, people use their cards in a digital way via Apple Pay in a way that they really couldn't before. Because if you think about it like this, you're at the kiosk and there's Apple Pay, or there's your card which you forgot in the car, you're going to use Apple Pay. And without a bank wanting to add their card on there, it's going to be Apple Card all the way. The same goes with the Samsung or Google variants. However, they didn't want to pay the fees for those services. So why are the big banks so worried if they're still getting their money? A big part of this has to do with the overall experience of paying. Right now, if you add a bank's card in Apple Pay, you're using Apple Pay on an Apple phone, maybe even to buy an Apple product. In that case, the financial institution's namesake is kind of going by the wayside, which for a lot of banks is what they rely on. They want you to think about the bank you're using, think about the rewards you're getting once you're making a purchase, and if you're not really doing any of that and you're really just focusing on the Apple experience, starts to make it a tough sell. And this is really a huge reason why the physical wallet is going away. The banks can't keep relying on these physical cards because people really like using digital payments. And that's exactly why the big banks are so worried. They don't want to get phased out just like the physical card did. So with all of this going on, what are they doing about it? Well, the first implementation was adding tap pay cards, which isn't quite as convenient as just using your phone to pay, which you can imagine is going to be kind of a problem if that's their way to compete. There's other little things like having little animations and sound effects when you use a specific card at a kiosk, but that's really not enough for the consumer to want to use that card over something that's more convenient. The other implementation, which I think might actually stand a chance, is the Pays wallet. This comes from a company that's owned by a bunch of the major financial institutions, and it seems that their main focus is the online shoppers. If you think about online shopping and you go to check out, almost all of the time you're going to have either PayPal or Apple Pay there. The way that these financial institutions would like it is that you have their little option too, that little purple button down there, so that you can use your card that you know and trust. There definitely isn't a clear winner on this front yet, but one thing's for sure, the physical wallet is going away. But I want to know what you think. Make sure to let me know in the comments, and I'll see you in the next video.